So how does a hard money lender value your property? Know up front, when you go to a hard money lender for a loan, one of the first questions you want to ask is, how are you going to determine the value for my property? Because the answer to that question can really make the difference between whether you want to use that hard money lender or not. Let me tell you why. There's 3 ways that a lender is going to determine the value of your property. The first is the most common, an appraisal, okay? The second most common, broker's price opinion, also called a BPO. And then finally, the third most common way to value a property is a CMA, or a comparative market analysis. Now let's start over with number 1, appraisal. So an appraisal is usually going to take the most time to get back, and it is the most expensive option for valuing your property. If you go to a hard money lender and they tell you that they want an appraisal to determine the value of your property, and you need to close pretty quickly, probably not going to happen. Most appraisals are going to take 2 weeks minimum to get back, sometimes longer. So if you have a short funding deadline, an appraisal might not be the way to go. And for that reason, you might not want to use that hard money lender. The second most common way I talk to you about is broker's price opinion, also called a BPO. That is the way that we typically use to value a property. It is a lot cheaper than an appraisal, and we get those back pretty quickly. So you can, if you have a short funding deadline, a BPO, or broker's price opinion, is gonna get you there, get you to that finish line for funding a lot quicker than an appraisal. And then the third way I discussed with you is the comparative market analysis, also called a CMA. And usually that is free. A realtor that performs a comparative market analysis for you is usually not going to charge you for that, or us as the lender, to give us that value opinion. It is also super fast. I can usually get a CMA back within a matter of hours or a day. So that is going to be the quickest way to value your property. So why do lenders need to know the value of your property? Why is that important? Because in order to give you the final cost of the loan, or the interest rate for the loan, a lender needs to know what is their loan to value, okay? Now I'm going to talk to you about this new term that you may not have heard about, that lenders use all the time. And this is how they determine what the cost of your loan is going to be. Loan to value, also called, you may have heard this, LTV, okay? So what is LTV? The LTV is a ratio of the loan amount to the value of a property. And when I say ratio, I mean you take the loan amount that you're getting from the lender and you divide it by the value. So whatever the value opinion that the lender ordered that came back, that's the number that you're going to divide the loan amount into. So let's use an example. Let's say you're taking out a $50,000 loan on a rental property. Okay, you own the rental property, free and clear of any debt, and you need $50,000 loan against it because you're going to go out and buy another investment property. Let's say the lender ordered a BPO, a broker's price opinion. It comes back at $100,000 value. So what is my loan to value, or what is my LTV? So what I'm going to do is I'm going to take the loan amount of $50,000 and I'm going to divide it by the $100,000 value. And I'm going to come up with 0.50, or 50%. So your loan to value on that loan is 50% loan to value. So why does that matter? Why does LTV matter in this whole thing? Because guess what? The lower the LTV, the lower the cost of the loan typically. If I'm going to give you a loan for 50% LTV, it's going to be a lot cheaper than if I give you a loan for 100% LTV. And there are lenders out there that are lending at 100% LTV, and that's why most of them charge high interest rates and high points. So if this is going to be the last thing I'm going to leave you with today. If you're buying a property to flip, then the value opinion is going to be based on your after repaired value, or what the property is going to be worth when you fix it up. So whether it's an appraisal, BPO, CMA, if it's a flip, that value opinion is going to reflect the after repaired value of the property, or the ARV. If you're purchasing a property that's not a flip, Let's say it's a buy and hold, or let's say it's a property that you're buying to live in. A lender is going to use the purchase price as the value, not the appraisal, okay? It doesn't matter if the house is worth $1 million and you're buying it for $500,000, because the lender is gonna say that property is worth what you're paying for it. So the value, if you're buying it and you're not gonna flip it, that value is the purchase price, not the appraised value. No hard money lender, no bank in the world is gonna lend you based on an appraised value on a property that you're purchasing. They're gonna go off the purchase price. Now, after you've owned it for 6 months, you could go out and get an appraisal or a BPO, and a bank may lend you, or a hard money lender may lend you on that future appraised value in 6 months, but not right now. It is worth what you're paying for it. Why? Because I can only turn around and sell that property for what you paid for it if nothing's been done to it. And then finally, let's say you already own the property and you want to get a loan against it. The lender is going to do the value opinion based on the fair market value of the property today. So for example, I own an investment property. It's worth $200,000 in the fair market, which means I can turn around and sell it in the fair market for $200,000. That's the value. And that's what the value opinion will reflect. Okay, so the lesson learned here that I want you to take away from this video, most important, is to remember, ask your hard money lender, how do you value my property? How much does it cost? And how long will it take? Because if you waste your time with a hard money lender too long and they're gonna require an appraisal and you didn't know it and you've got to close in 3 days, not gonna happen. This has been Corey Dutton with Private Money Utah. I'm a private money lender. This has been a little bit of Hard Money 101 on how to value your property. If you liked it, please like it. If you have any other questions about what I've said here in this video, leave your comments in the comment section below. And if you know somebody that could benefit from this information, please share it.